Hi, good morning or good day. It's Friday, 25th of May 2018, like every day. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for that daily, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. I'm the German guy from Admiral Markets. We are a big international broker. We have over 18 country offices, so I'm the German guy. My English made in Germany, but hopefully some of my quality too, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday at Jay's Day, on Tuesday it's Paul's Day, on Wednesday it's Giancarlo's Day, on Thursday it's Dinner's Day, on Friday it's Dirk's Day. Our leading day traders live every business day, every trading day. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30 to a spread of just 0.8 points to the main trading hours. You can start with mini lots, 0.1 lots, even CFDs, and MT4, MT5. It's your choice. All the benefits, check them out on admiralmarkets.com. There you will find also something about our regulatory background and how to contact us. You can call us, you can send us email, or visit the other channels like YouTube or Facebook. Everything's linked from admiralmarkets.com. Enough from my side. And now, good morning, good day, Dirk, back from your holiday, back from your vacation. So what's your view to the markets today?
Yes, good morning, Jens. Good morning into the crowd, of course. And first of all, we will have a look at the screen. Hopefully that screen is now being shared and you might be hearing me perfect. Just a little bit of feedback after a couple of weeks. If you don't use your computer, maybe there's a couple of stuff going on with it. So, okay, we will start in having a look at a couple of markets. First of all, I would describe those 3 markets I want to talk about a little bit more. Is first of all, of course, the Euro-US dollar. The second market will be the bond future, and the third market might be gold. So let's start with Euro-US dollar and just close all these windows just to have the naked chart, just to have a look what was going on a couple of weeks right now. As we already see, the Euro-US dollar rate is really about to neutralize and to delete all the winners from the last month. If you have a look at this very important low here, that's the low from the 7th of November. It is at 115.53.4, and the high, of course, as you know, and see that from the chart, is the 125.56 to round that up. So it's almost on its way to neutralize all this round about 1k pips from this move to the upside, again to the downside. What has happened? What is going on with that one? Of course, you all know the news about in the last weeks. For example, the bad news about Italy. Bad news is it that way because it is hurting the euro system, and a lot of things are being reported about the current or the next, let's say the next Italian government, who is about to trying to renegotiate the euro contracts and the talks about debt financing and the whole Italian debt. So this is something they like to be talking about. And of course, the rest of the European Union and the Eurozone is not very happy about that. And of course, a lot of investors fear that the euro might be getting something like a slap from the markets. And this is something we saw the last weeks, of course, on top of that. But the most important thing is not only that Italian election outcome and that Italian government, which will be formed from Lega Nord, and the 5-Star movement. No, it's mostly the US dollar policies, so the Federal Reserve policy, and the Fed is about to hike in June, I guess. We will be having the non-farm payrolls next week on Friday. This will be another trigger to tell the Fed that they might make a new move, and you will have to look at the so-called FOMC tracker. You can see that and find that via Google FOMC Watch tool, that a couple of percent, or almost between 90 and 100%, are on its way to time and to tell us that there will be a hike in June. So what is the chart technical aspects from the next days and weeks to come? Let's go to a more detailed view now. Oops, I just did this the wrong way. This Fibonacci tools. Just go to this low of 115.54 and to this high of 125.56, and you will be seeing, besides that 115.55, you will see a couple of those projections to the downside. This is a longer term view. Now we will change that into a little bit of a short term view. We stay at the daily, of course, and just have a look at the last lows. We will be entering this Fibonacci system here as well, just using another color. Let's say it's, for example, it's black. Just only because of the reason not to get confused with all these lines. So there might be a so-called reverse. The reverse is on top the 23.6, which is around 170.50. This one has been tested yesterday already, and so far it looked like this retest of those. This is 123.6 Fibonacci is not correct, and will be moving to the downside back down again. But nobody talked about the IFO index this morning, and the IFO index this morning was a little bit of a surprise, or let's say it was something like more convincing. Of course, the German IFO index came out with 102.2 points, and a couple of analysts and mostly all those guys having something like a research on that one spoke about 102.0, so it's a little bit better, but in the end it is better, and it brought up the euro, US dollar, and even the DAX a little bit to the upside. Most of these let's say points from the last IFO surveys went off because all of these unsecure environments, because of the U.S. policy and the trade policy of Mr. Trump and his administration, might be another trigger to the downside. You all heard him speaking yesterday and the last days about this new tariffs, which might be imposed on European automobiles. So the automobile sector, even in Germany, is very strong. And that might be giving the DAX a slap as well to the downside again, maybe next week. So what has it to do with all these US policies and geopolitical tensions the last weeks? On top of that, on top of the Fed policy, we heard a lot about the North Korea meeting. This one got cancelled by Mr. Trump himself. And you saw the market is reacting like yesterday. The market is reacting something like nervous and with a sell-off. Okay, the next targets to the upside. Let's get to those 4-hour chart. Squeeze that a little bit more, and have a look to the next upside levels here. The 61.8 level is one of the most important levels. If this one is about to getting back up there, is 118.70s. Right now it doesn't look that way, that the euro is heading up this way, because we are still waiting for the outcome of these government forming in Italy. This might be something happening like today or over the weekend. The President Mattarella must decide if he takes all these guys into account, and if he gives them the 100% way to form the new government. Okay, so these downside levels stay focused to get this 115.54, which might be a nice trigger for a reverse. So there are two possibilities right now: selling the next spike to 170.50s to the downside, and with a stop loss level around the 38.2 level. That might be something interesting. So it's something like a 117.90s stop loss level, or stay long and wait until this 117.90s is getting reached, and just close the trade and do nothing before the weekend. So this is the EURUSD dollar. Italy again is a very important topic here. We are talking about the Eurobond future right now. We will be having a long-term view, of course, to this long-term high, 168.82, and to this low in 155.50s. These are the 2 points we are about to set up this Fibonacci tool here. Just widen that a little bit so you might see more. And as you can see right now, this 38.2 level got scratched today just from the long-term view. Then we will be having another setup from the last highs. This is the level here. I will be moving that with the red Fibonacci right now. Same reason, not to get confused by all these lines. It's simply 2 different colors. All right. So there are a couple of lines which are giving you a little bit of a feedback, like this 38.2 level here and this 50% level, which is absolutely on the same, almost on the same level. Next target to the upside is the 61.8 and the 50 level here between the 161.60s and the 162.20s. So let's face that around 161, 90, 99, 98 in this direction, where you might take your profit if you're staying long over the next days or over the next 1 to 3 days. It is very important just to have a look at the current Italian politics. You might be having a look at the outcome of this government forming process, and of course about the talks in the media, about the talks around the policies from the European Union. If that stays that way, it's something like the Eurobond future is something like a safe haven move. So everything you see right now is something like the big billions and the big billions of all the money is flowing into the Eurobond, into the German bonds, and flowing, for example, out of the Italian bonds or a couple of other European South region bonds like Spain, for example, or Portugal or other countries. There is a high level of risk to be getting contagious, like we saw that at the Euro crisis. If there is something happening, like the Italian bonds are moving more to the upside, then we will be seeing something like a 162 to 163 level in a couple of days. It will be getting very, very fast. On the other side, if you just don't know anything about the Eurobond future, that means if the Eurobond future is going up, let's say a couple of 100 points, on the other side, the German 10-year yield is going to the downside. So right now we are hovering around the 0.45ers, 0.47ers, down to direction 0.42, 0.40. And if it's going upwards, all the way up to, let's say, 163, we will be getting into the lower 30s and upper 20s. So that means that the 10-year yield of a German bond might be yielding around 0.25 or 0.30%. Very important to watch is so-called spread between Italian bonds and German bonds. So like this this one here shows you around 160.35. Wait for a little bit of a relief. Let's say the half of this big candle from today. From this week, sorry, and step into a long scenario if the Italian government is being formed with those two, like we already predicted. Okay, and then let's have a look at gold. Very important to say, by the way, between all these currencies and now moving to gold, if there is anyone out there trading the Swiss currency, you might be having a look at the next topic, which is about to come, overrun us possibly, something like a Brexit. This is something like important like this Brexit move. This could be. It's the so-called Vollgeld referendum. I don't know, actually, I don't know the German, the English expression of Vollgeld. Maybe it's a full money system, wherever you will translate it. You might be checking that one via Google and via Reuters or via a couple of other agencies, what is going on with that one. So the Swiss, as you know, the Swiss is a direct democracy, and they are voting about a couple of political and economical issues. And they will be voting on a monetary reform. And the date will be the 10th of June. So that might be something quite interesting for you guys if you are interested to trade the Swissy, for example. Okay, back to gold. If you have a look at the Euro-US dollar, if you have a look at, for example, the Eurobond future, you see there is a couple of, let's say, a correlation. In the last days, the gold found it's something like its bottom. It is around the 1,282.05. That's the last low here, and this one got up to the 23.6 level from the last high. The last high is from, let's see, it's from the 25th of January. Then there was the other high. It was from the 11th of April. It's 1365. Let's see if that is the high. I'm not sure about it. Yeah, it's correct. And besides all this is kind of an upwards move or something like a reaction. Gold is a reaction of to all these kind of geopolitical tensions, which came up back again after this North Korean meeting with USA got cancelled, and it might be heading upwards to direction the 1,316 back again. So this is the level. This is the level which we see around here. Okay, we spoke about a couple of those markets. Let's go to the most important market. Let's go to the DAX. So first of all, I need to get back into all the stuff again, of course. Like Jens said, I've been on vacations for 3 weeks in the US, and of course, I try to keep up myself with the markets and the movements most of the time. But actually, in trading stuff, it takes mostly 1 week or 2 weeks to get back in full trading mode. Okay. Let's see what is going on with the German DAX. One thing before we start with the Fibonacci discussion right here, with the most important bigger move is something like a change of the bias. What does it mean? A change of the bias is set up for a trader is something like all these years we saw that from the first reactions of the Federal Reserve to pump the money, to start quantitative easing and to be responsible for one of the biggest moves to the upside over almost 9 to 10 years. Is the reason that the central banks were acting like expensive money system and brought up the whole markets, of course. This was the bias when every dip was something like an invitation from the market to just buy again, so-called buy the dips. If we look at the current, or let's say the last weeks and months, even since the Federal Reserve started to reduce or even to hike, then we will have a new bias, and this will be getting into details for us all in the next weeks and months to come. So the more we are looking at hikes, the more the yields are going around 2% and 2.5%. It might be getting interesting to change your trading bias. It means every spike to the upside should be something like an invitation to sell again. So that means it's completely the other way. If you start a couple of day trades or a couple of, let's say, swing trades, you should be waiting for a couple of days, like for example today, or even let's say Monday. If the market is moving today to the upside and will be starting to move upside on Monday again, so there are 2 days, might be something like 150 to 200 points at the DAX. If that is really good, if that works that way, you might be having an invitation to go short again and to try to catch the next move to the downside. This is something like the last days, for example, from this 22nd of May. As you can see, the high was 13,205. And as you can see right here, the low was 12,800. So 400 points in just 3 days. Not too bad, but it's time to just to face this technical facts. This is 61.8 level. Every time I spoke about this level, it's something like a trigger or something like a very important level, support level from this move from the upside to the downside, support level, which kept on holding until now. If that is about to break, the next level is the 50%, and let's better say the next bigger important level will be this 12,400, 12,430. You just need to know about Fibonacci retracements that the 50% is just a technical line, and if you have a look at the deeper, let's say, meaning of Fibonacci's, you will be seeing that a 50% level is not in those Fibonacci numbers. Okay. Next levels to the upside, we will be having a look at the hourly chart. First, before we start, we will be deleting this one. Most important from the hourly from the hour chart, 1 hour chart, is that you have a look at the last high to the last low, which is the same level with Fibonacci levels here, same work, let's say. And the next target to the upside is that 13,060s. There's the Fibonacci level of 61.8. And a nice level where we saw last high right here is this 13,015 level. So a slightly move upside the 13K marker. It might be something like this. The market might be retesting, scratching, and waiting until the US markets are about to open. So this could be a kind of a strategy for the next couple of hours. Let's say until 14 or 14:30 CET, when you were talking about 1 hour before the US Open, when market is a little bit in a kind of a little bit of a snoozing methods, because the market is waiting until the US markets are about to open. So this is something we could see with the so-called trading box, as I always describe it, that this is a kind of a short setup around this level between the 12,980s and the 13,020s, which will be something like a first reaction to the downside, and then until the US market is about to open, possibly, if that happens, there's a trading box for a real long setup around this 38.2 level from the Fibonacci line here as well. So that might be something like a move to the 38.2 Fibonacci here and moving back up again. Okay, Jens, I'm not sure about the time. Is it still time to talk about
Time is always
oil?
our limit. So our goal is quick and smart, but for that daily. Tomorrow is another day, but tomorrow is Saturday, so I wish you for tomorrow a great, nice weekend. And the next business day is Monday with Jay. Jay is usually more for the institutional view about Forex trading, so hope to see you on Monday again. Greetings and thanks to Dirk. All the time good trades. Again, have a nice weekend. See you on Monday, hopefully. Bye-bye.
Bye-bye. Have a nice weekend.